Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. Welcome to Bazaar Morning Call. I am Reema. With me, we've got Nigel and Prashant, and we're coming to you live from the CNBC-TV18 Motilal Oswal studio. It's a fresh start to trade, and after a volatile Monday, the question is, can we build on the late recovery that we had yesterday? Mid-caps outperformed. Globally, Wall Street, it was a mixed sort of a day of... there was a recovery that we saw in Wall Street after the rout on Friday. So the global picture is looking a lot better. But Nigel, the big one that I'm most excited about is to see the kind of listing LG Electronics has.
Well, that's right. Big listing, well priced, and the street is going to be looking forward to. And all those that got in that IPO allocation, they'll be quite happy because they're going to be sitting on a smooth 30, 35, 40% kind of gains just on listing gains. So good times for those that got it.
And it's a rarefied few, right? Because so many messages on social media saying we'll apply it, nothing, zero. But just amazing, 54 times overall. And just in terms of the sheer amount of money blocked for this IPO, it just kind of sort of tells you the story that we have had in the primary markets. Now, let's just quickly run you through what you need to know as we begin this new session. So it's the taco trade, which is, 2 steps forward, 1 step back, 1 step forward, 2 steps back. With regards to President Trump and his announcements. So 100% tariffs, all will be fine with China. And the market took note. So strong rebound is what we had. Equities were higher. S&P was up about 1.6%. NASDAQ was up 2.2%. Russell was up strongly. So now to boot, of course, around the same time is when we were talking about that comment from President Trump, which is walking back the tariffs, etc. Treasury Secretary Scott Bessent also came in. He said that Trump's meeting with President Xi in South Korea is still on. Now, remember, President Trump had essentially said that, maybe there's no need for a meeting now. But, after that tweet from him, the post from him yesterday, same time, I think expectations had risen that maybe that is going to be on. It was confirmed by Secretary Bessent. So WIX, which had rallied 31%, fell 12%, back to about 19%. Bond markets, cash trading was shut for Columbus Day public holiday. Futures traded, though not very much. Another day, another deal, right? Tech and AI. And that's the segment which has been sort of leading this move. So this time it was between OpenAI and Broadcom. Broadcom ended 10% higher. And both companies are going to develop and deploy 10 gigawatts of custom AI chips and computing systems over the next 4 years. That was the announcement which came through. And I think that reverberated across the tech and AI ecosystem. Lots of movers there. I'm not going into single stocks here. Oil prices, at least on WTI, just under $60. Gold prices continue their move higher, about 2.5% last night. So 41.30-ish is where we are at this morning. So there is no stopping. And of course, here the big moves have come through from silver ETFs, which are continuing their uninterrupted rally. Out of the Middle East, it happened yesterday around afternoon, evening. President Trump essentially hailing the Gaza Peace Summit as new beginning. This was happened in Egypt. Here in India, I think as Reema and Nigel were pointing out, the LG Electronics IPO listing is going to be the big one. So they asked for some 77,000 crores in market capitalization. And I think at least on day one, listing day, it's going to get a good response, 1 lakh crores in market cap, and then we'll see where it goes. But that is going to be the other big one. Now, just to tie in the levels, not very much has changed. Nifty, of course, ended lower, but off the lows by a big margin. We still ended above the 25,220-odd level. So the high on Friday was 25,330, which is the first resistance, which is Friday's high. And then the next stop then is 25,652. Support is 25,000. And for the Nifty Bank, it managed a green close yesterday, unlike the Nifty. And here the resistance next stop remains unchanged, 58,163. Support basically at about 55,821. So those are broadly numbers that we are working with. GIFT Nifty gives you a quick sense of how we start. And we'll pick it up from there. Absolutely flat, 6 or 7 point change lower is the implied open. I just want to quickly play out, Scott Bessent, on that President Xi and President Trump's meeting in South Korea, confirming that it's on.
The Chinese economy is doing very poorly, and maybe they're trying to take focus off of that. Two, China, as opposed to the United States is pushing for peace in the world. China is financing war. China purchases of Russian oil is financing the Russian war machine. They purchase Iranian oil, and we have been calling them out on that. So maybe it was to distract from that. And three, maybe it was a mistaken attempt to try to gain leverage before the two leaders meet in Korea in October. And I can tell you, trying to get leverage in front of a meeting with Donald Trump is a bad idea.
Absolutely. Well, that's Scott Bessent, Treasury Secretary, on, of course, that meeting in South Korea later this month. F&O statistics, how are things looking? How's positioning, more importantly? Nigel is standing by with exactly that. Nigel, over to you.
Well, today's Tuesday, so you'll have the weekly expiry that will play out yet again. So expect some kind of volatility, particularly towards the end of trade. The FIs, yesterday they didn't buy, but they sold a measly 200 crores odd. Par for the course, one would say, and the DIs, they're showing us the big money. What about on the index futures? Well, they went ahead and they added some short positioning. Close on 4,000 contracts is what they added. 93% of their positioning on the short side. I'll tell you what, you'll not complain with these short positioning at extreme levels. Any kind of glimmer of good news, in fact, could push the markets higher. So shorts in the system actually is providing some kind of cushion. And that's why I've been saying that this market from sell on rise has actually turned into buy on dip. So bad news is getting bought into, like we saw yesterday. And what they did on the option side? Well, they wrote more calls. They unwound some puts that they wrote earlier. And because of the kind of call writing that we saw, the PCR that had moved to around 1.35, that's come back down to around 1. So that's realigned itself, which is actually a good thing because you don't want the PCR to move to the upper end of the band. Moving to the options data then, the reason the PCR came down because the call writers, 25,200 call, 25,300 call, massive open interest built up on both those two. While on the downside, the 25,200 put as well did see a good amount of open interest built up. Keep in mind, these strikes will expire today itself. Which brings us to the data points. What are the levels you're looking at? Now, yesterday's low is going to be important because yesterday's low as well as on Friday's low is around that 25,150 ballpark. You know, the crucial level that you're looking at, the first support level is at around 25,000. But if you want to track one level, that's the one on the downside. Last week's high is going to be important. If you can get past that, this is the congestion zone from a bullish perspective, 25,330 to around 25,450 odd. The Nifty Bank, well, yesterday there was one encouraging sign because it's continuously making higher lows. So in terms of a reference point, you've got that data point as well. So the Nifty Bank, well, that seems to be in fine momentum and it's been looking quite good as well. So that will continue to lead the way. But today, you could get some kind of support coming in for tech because HCL Tech's numbers were very, very good. You know, if you look at the revenue growth, the margins, the deal wins, as well as, you know, their talk with regard to reporting AI revenue separately. So that one could fuel up a bit of a rally in the IT stocks, or at least, unlike yesterday, we won't see that kind of a fall on tech, which underperformed yesterday. So that's one stock that I'm looking at. The other two names that I'm looking at is MCX. You know, I was looking at the premium, the average premium on Friday itself was much higher than the Q2 average, which was as much higher than the Q1 average. So those premiums that they're reporting actually on a day-to-day basis is much higher than what the street is working with. So that's what could help MCX. BSE, because obviously it appears now that the fear with regard to the weekly options is gradually receding. So both those two exchanges continue to remain on the radar. And the big listing, LG list today, expected to be a blockbuster one. So I'll keep an eye out on this stock. You have a couple of initiating coverage reports on the day of its listing. So that one should have a blockbuster listing later today.
Indeed. So Sensex weekly expiry today, the LG Electronics IPO opening. And on the earnings front, keep your eye on Tech Mahindra, Persistent, ICICI Lombard, ICICI Prudential, IREDA, Cyient, DLM and Bank of Maharashtra. These will be the big earnings for the day. But let's get to Matt Orton, the Chief Market Strategist at Raymond James Investment. Matt, thank you very much for joining in. The Wall Street action yesterday, a solid rebound after Friday's rout. We managed to claw back 50-60% of Friday's losses. Was the Friday sell-off a weakness? Or, are you getting a sense that markets are now nervous? I mean, what's the call now on Wall Street after the kind of rally that we've seen with the tariff threat still looming?
Hey, good morning, Rima. It's always great to join. And I think the price action today, or I guess yesterday, was definitely encouraging. What we saw on Friday, I think, was an excuse for the market to sell off and consolidate a little bit. If you can believe it, it was the first day in 34 trading sessions where the S&P 500 had more than a 1% move in either direction. So we've been in a very, very low volatile environment. And there's been a lot of gains for the market in the absence of any sort of economic data or information that could disrupt the rally, and I'll call it the visibility into the strength of the AI trade. So I think Friday was just a reason for some profit taking, and the fact that we were able to see strength through that with respect that we're not going to be in a tit for tat trade war again with China is definitely encouraging. So I spent the past week in Europe meeting with clients. The mood, I think, is still fairly pessimistic, or I would say one of reticence, of hesitation with respect to the market being at all-time highs. And I always encourage our clients, like we've talked about in the past, come back to the fundamentals. The corporate earnings picture in the US in particular looks very, very strong. There's a lot of good developments for long-term, durable, secular growth themes, and that's what you want to lean into as an investor. So I think hopefully this market can continue to move higher.
Matt, you like a lot of these consumer tech companies back home in India. I remember in the past you talking about Swiggy, the quick commerce plays largely. You've got another one listing today, LG Electronics, not exactly a platform play, but in the consumer electronics, and valuations are attractive, 30 times forward multiple at issue price. So if we do get a gap up as expected, say 30, 40% higher, would you look to buy it, or do you think then it would be a fair value? And tell us some of the recent trades, investments that you've made in India.
Yeah, absolutely. So I have a rule where if I don't get a piece of the IPO action, I do not trade it on the first day. I like to wait to see how things actually settle out. But to your point, Rima, the LG IPO is exciting, and it's exciting for really three key reasons. Number one is just the fact that we're bringing a company that operates in a higher quality consumer part of the market, and it's driven by a strong investor enthusiasm. And I think two is here's a company that's able to play into this premiumization trend. It's one of the key reasons why I've liked Mahindra and Mahindra for such a long time. It's playing into this concept of a burgeoning middle class and the ability to push premium products. And I think thirdly is by employing that type of strategy, you get better margins, and margins lead to better free cash flow and profitability. And so that's what I like across a number of companies. So Swiggy, I can't wait to see what earnings are going to play out. Eternal's been another quick commerce name that I've liked a lot. And so I'm looking forward to hopefully seeing a continued trend with respect to monetization of the investments that these companies have been making. And I think a lot of the data I see from, say, a Paytm is certainly encouraging of just where the Indian consumer is. So we're certainly starting on a good foot with respect to tech. It's not a disaster like it has been in the past. And so I'm hopeful that we can start to see stabilization to earnings in India, which I think will attract the attention of more foreign investors.
All right. Hi, Matt. Good morning. Good to see you, Ben. You've spoken about banking names, ICICI Bank. In the past, you've liked Apple as well, and a couple of other notable ones, I think Mahindra as well as Interglobe. How are you positioned on tech, though? TCS's numbers weren't that bad. And HCL Tech is obviously a better set of numbers. On tech, how are you positioned right now? Would you gradually start turning constructive, or do you believe there's still too much uncertainty? You'd rather stay away from there?
Yeah, it's a great question, Nigel, and I ask myself that every day. I'd like to see more of the earnings come in. So I'd say what we've seen so far, one data point does not make a trend across the industry. And so I'd like to see more strength with respect to the ability of these companies to drive artificial intelligence revenues. I think that's going to be very, very important. I'd like to see stabilization with respect to their overseas businesses, in particular Infosys. I'd like to see stabilization with respect to their European business and their financial and asset management businesses. That's going to be important. So if we can see earnings not getting worse and better visibility and more upbeat commentary from management teams, I think that would be a signal to me as an investor to say, hey, maybe it makes sense to put a little bit more dollars to work in these companies, and then I can push that position over time if I continue to see momentum build in those names and other good sets of numbers, say at the start of next year in 2026 when we get Q4 data.
Okay, any other investments, recent purchases in India?
So I haven't done anything else outside of last week when we had a conversation about, adding some more exposure into Swiggy and adding a position in Apple 3i. I think heading into earnings season, I want to be very conscious of the volatility that there could be, and I want to see results. Again, it's okay to be early, but I much prefer to see a strong story play out where I can add, and I have very high quality positions. I've added a little bit back to my position in ICICI Bank. That looks like it's gaining a little bit more momentum. So if we can see financials in particular start to strengthen, I think that'll also be a good signal for India as a whole that it makes sense to maybe rotate some of the dollars I tactically moved into China back into India to re-up my positions.
Matt, always a good conversation. Thank you very much for joining us here on CNBC-TV18.
Thank you.
Okay, well, let's just quickly run you through what's lined up here over the next 2 hours or so. So coming up at 8:35, we have the management of KEC International. So we talk about the new order wins at KEC. Vimal Kejriwal will be with us. 9 a.m., we'll have Sumit Gupta of Centrum to talk about expectations from the hospital space, was the big outperformer last week. 9:20, Nimesh Chandan of Bajaj Finserv AMC will talk markets with us. 9:35, Raj Ratan Global Wire and Bellrise Industries join in to talk about demand trends in the auto component space post the GST cuts. Following that, K. Suresh of Association of National Exchanges members of India and Rajesh Baheti of Trustees Capital Services on our exclusive story from yesterday. Sources basically reporting, saying that SEBI, the bar for SEBI to touch weekly options is high. They're going to do a lot of other things before we get to that. Towards the end of the program, it's our special Diwali segment. Lata speaks with Devina Mehra, First Global, on how Dalal Street will navigate Samvat 2082. Okay, time for a quick commercial break. Our list of top stocks to watch with our research team lined up next. Stay with us. Welcome back. Our research team is standing by with CNBC-TV18's list of top stocks for the day. Well, I think we're going to start with HCL Tech, which came out with numbers yesterday, and numbers were a beat. Rima, tell us more.
Indeed. So HCL Tech beat on revenues, margins and deal wins. The company's top line has gone up by 2.4% quarter on quarter, ahead of estimates. And after 2 quarters of decline in the current quarter, we are seeing very strong growth. Margins have also expanded by 110 basis points sequentially to 17.4%. Again, better than street expectations. And deal wins were up 42% to $2.5 billion. But here, remember in the prior quarter, the company said the 2 large deal wins got deferred. So that's showing up in Q2. But in the press conference, the encouraging sign was the company said that Q3 deal wins will be strong. So in a nutshell, revenue, margins, deal wins, all strong. The overall revenue guidance has remained unchanged at 3 to 5%. But in the services business, which is a majority of the company, business, the company has tightened the revenue band. So 3 to 5% has now become 4 to 5%. Margin guidance remains unchanged. What's also, a little encouraging is the company has now, quantified the AI revenue. Advanced AI revenue in the current quarter is at $100 million. And HCL Tech becomes the first Indian company to actually give out an AI revenue. So just the fact that AI revenue has now moved from pilots to projects, or it's mature enough to warrant a separate reporting line, will be read well by the street. And let's see whether it's a start of more disclosures from the rest of the IT companies.
Absolutely, Rima. That could be one of the stocks of the day. So good news with regard to HCL Tech. But let's hop across to Lata. The CPI data was good. And what's the impact on banks as well as NBFCs? Lata?
Well, the headline CPI for September has come in at 1.54%. And that makes it a 100-month low or something. It's an 8-year low. The important point is the month before was 2%, the month before was 1.6. So if you take the July, August, September average, it works to 1.7. Now, the Reserve Bank had just lowered its forecast to 1.8 from some 2.7. So even much below their aggressively lowered forecast, you are seeing an CPI undershoot. The good news or whatever, the news on CPI doesn't stop there. The October CPI now is expected to be 0.5%, 0.5 or 0.6%. That's the CNBC-TV18 poll indication. So you imagine a Reserve Bank MPC going into the conference on December 6th. They have with them two readings, which is below their mandate. The mandate is 4% plus or minus 2%, which is inflation has to be between 2 and 6. You're going with actually 3 out of the last 4 months below your mandated range. So chances are it is extremely tough for the Reserve Bank to avoid a rate cut. Even the forward-looking CPI numbers, which they normally allude to, have to be brought down considering the undershoot. And therefore, the market is penciling in a rate cut in December. What this will mean, of course, is more pressure on the margins of banks. That's what stock market would be interested in. And it would be good news for NBFCs. But, you know, I don't know if this is really all that fresh bad news for banks. One rate cut was always there because the Reserve Bank governor in the press conference in October clearly said that this opens up space to support growth. It was only the timing of the rate cut, and now more and more people are penciling it in December. I don't know if it's a solid bad news. It is certainly good news for FMCG. There is more purchasing power in the hands of people because inflation is eating less out of their money.
Thank you very much for that. I'm looking at Just Dial also, and here the revenue growth continues to be very, very modest. Quarter-on-quarter revenue growth is less than 2%, year-on-year 6.5%. And this is a company which has been growing in single digits top line for the last 5 quarters. Margins for the company are very stable, so that's not a problem. But profits this time, if you pull up that chart, you would see it's fallen very sharply, down more than 20% quarter-on-quarter and more than 20% on a year-on-year basis. And that's on account of an increase in tax rates. Even the other metrics are a bit disappointing. So the traffic has declined by 0.2%. The paid campaign growth is also weak, just up 1% quarter-on-quarter. Citi has cut the target price to 1,060. Nuvama has cut the target price to 1,200. You know what always helps Just Dial at the lower levels is the cash in the books, which is at 5,570 crore versus their market cap of 7,300 crore rupees. The stock is down 15% year to date and 30% lower in the last 1 year. But there you have that. Cash in the books is always supports, but numbers and growth is still very, very weak.
Okay, all right. Thanks a lot for that, Rima. Well, going to Ria, she's tracking Anand Rathi. Morning, Ria.
Good morning, Nigel. Good set seen for Anand Rathi in Q2 of FY26. The net profit has gone up by around 6% sequentially at 99 crores. Even the revenue has seen a jump of around 9% sequentially, coming in at roughly 297 crores this time around. EBITDA also seeing growth of around 8% on a quarter-on-quarter basis. Net inflows, however, have gone down by 22% sequentially at 3,002 crores this time around. Now, overall, the company has seen continued growth in turbulent markets, although there has been a slowdown in AUM growth on a sequential basis, but the company is still in line to achieve its AUM growth target for the year. So stock expected to open in the green today on the back of this.
Thank you very much for that. And let's get to some more stocks. Lodha Developers, Oil India on Sonal's radar. Good morning, Sonal.
Good morning. Let me start with Lodha because they've made an acquisition. They have acquired 100% stake in Chaitanya Birla Private Limited. This is a company which does not have any commercial operations, but they have a land, and that is the reason why the company has gone ahead. The consideration is around 500 crore rupees, and the land that the company has is 8.37 acres in Bengaluru. For Oil India, there are 2 updates. One is their product pipeline, which is the Numaligarh-Siliguri pipeline. That has commenced operations, and that will expand the capacity from 1.72 million metric tons to 5.5. And this is the reason why Numaligarh refinery will also be able to increase their capacity from 3 million metric tons per annum to 9 million metric tons per annum. Secondly, they've entered into a long-term agreement with NIPCO to supply 1.42 MMSCMD of gas. This is for a period of 15 years, and that's the reason that stock will be on our radar.
Thank you very much for that. And now across to Sudarshan for more stocks in the news.
So it seems GST cut has not come only as a boon for entry-level segment, but for the luxury segment too. It's showing a huge growth, and Landmark Cars has reported a Q2 business update in which company is saying that Q2 revenue growth is likely at 31% year-on-year, and that's the highest in a quarter that company is expected to see since listing, and it's being aided by the increased number of outlets and the strong demand that company has seen during the Navratri season. In July, company had 2 Kia outlets operationalized in Hyderabad and had opened 1 store, Mercedes-Benz store in Patna, and all these 3 stores are showing a huge growth since the day that it was operationalized. Second stock that will be in focus is Uniparts India. It has announced special interim dividend of rupees 22.50 per share, and for that record date is October 23. Also, company is saying that it continues to evaluate inorganic opportunities if anything comes. Last one is KC International. It has announced an order win of rupees 1174 crore, and with this total order intake, Y2D has crossed almost 14,000 crore. So all the 3 stocks, I'm going with green.
Okay, all right. Thanks a lot for that, Sud. Well, here's a quick recap of all the top stocks we just discussed on the Top 10 segment. The ones with positive news flow: HCL Tech, Anand Rathi, NBFCs, Lodha Developers, Oil India, Landmark Cars, Uniparts India, and KEC International. Well, we have a couple of them that will be reacted to negative news flow, which include Just Style as well as banks. That's about the equity markets. But as always, Manisha Gupta joins us to give us a complete roundup of what's going on in the commodity markets overnight. Manisha, they're twinkling overnight, it looks like.
Well, yes, it's an all-time high yet again for gold and silver as prices. If you look at gold, well, we've seen a 2.5% of gains in the overnight market. $41.50 is where it's trading right now. And the Indian markets, as they open, will be opening at an all-time high. Take a look at silver, and we've seen a 4% of a jump overnight. Another record highs for the global markets. India would be opening the same way. We are at $53 an ounce right now. We started this year with 29, so it has been nearly 82% of gains for silver in this year. Platinum also not too far behind. We've seen 4% of gains coming for that. Copper prices gained up by 6% overnight. If you look at Baltic Dry Exchange Index, that was up nearly 10%. The global shipping costs increased higher as US and China roll out reciprocal port fees from 14th of October. And then you also have various other commodities like aluminum doing quite well. Palladium is trading at a 2-year high. So everywhere that you look, the tangible commodity is absolutely doing quite well.
Thank you very much for that. We will slip into a break on that note. On the other side, we'll connect with Parag Thakkar of Ford Capital for some fundamental stock talk. Welcome back. HCL Tech will be the stock to focus on after reporting a good set of numbers, especially after the disappointment in Q1. The company's beaten expectations on revenues, margins, deal wins were also very strong, exceeding $2.5 billion. At the press conference, we had a chat with the CEO of the company, C. Vijay Kumar, on the overall performance. Listen into what he had to say.
Our revenue grew 2.4% sequentially, as well as 4.6% on a Y-on-Y basis in constant currency. Our advanced AI revenue this quarter exceeded $100 million mark, representing approximately 3% of our revenue. Our operating margin came in at 17.5%. Our margins grew 116 basis points sequentially and is the result of the recovery plan we had shared with you last quarter. This quarter, we clocked in a booking of $2.6 billion, which was well balanced across service lines, geographies, and verticals. This is the first time we've crossed the $2.5 billion mark without any mega deal. We also signed 2 large deals, which we mentioned were delayed last quarter.
Well, that is HCL Tech for you. Parag Thakkar, Senior Fund Manager at Ford Capital, now joining in. Parag, interesting updates coming out of the Indian technology space. Everyone had written it off. There was no interest in technology names. But then you had TCS, announcing a play on the AI data center, making a $1 billion investment to begin with. Now HCL Tech quantifying the kind of AI revenue, $100 million as a quarterly run rate as it stands today. I mean, is it time to start looking at technology, and are these steps material by the Indian tech companies?
Yeah, I would definitely like to think so. See, first of all, my view is that these companies are free cash flow generating machines, right? So you cannot completely ignore this space. And that is why we were also underweight, but not to the extent the street is. We have around 9% weight, and we have TCS and HCL Tech both in our portfolios. And I would like to say that, see, HCL Tech delivered on all fronts, right? Be it revenue growth 2.5%, be it margin 17.5%, be it deal wins $2.5 billion, and plus the commentary that this kind of deal win run rate will continue, which is very, very important, right? So I would say that and the only thing people have against HCL Tech is now the valuation gap between HCL Tech, TCS, and Infosys is very narrowed, while HCL Tech earlier used to get a discount, significant discount. But HCL Tech is delivering, right? So I would say that, yeah, you cannot completely ignore this space for sure, because of simply the fact that TCS, Infosys, and HCL Tech right now gives you 4.5% dividend yield. Plus it is not that this AI-led productivity gains are leading to some deflationary in revenues as of now, at least. That is a fear, the only fear which I have in future. But I would see the commentary of each IT companies to build a view around that. That is a key monitorable for me. And for HCL Tech, the key monitorable will be next year, whether they will be able to deliver margins between 18 to 19%. But given the current margin of 17.5%, which has recovered from Q1, as they had said in Q1, I think it is manageable. Unless this AI-led deflationary impact on revenues plays out next year.
Okay, all right. Hi, Parag. Good morning, and good to see you in. Parag, I wanted to ask you about the exchanges. BSE, late last, towards the end of trade, my colleague Yash, he had reported with regard to this weekly options, restriction. That fear is gradually receding, and that's why you saw BSE did pop up in trade. I was speaking to Amit Jaswani as well as Stallion yesterday, and he was telling me that if in case that doesn't come about, then capital market plays could be forming a near-term bottom. How would you approach this space, whether you're looking at the exchanges, whether you're looking at the brokerages or the likes, and also if you're looking at MCX, because out there as well, the premiums actually have been spiking up. Q1, I think it was average of 4,500 crores, second quarter 6,500 crores, and on Friday it was more than 8,000 crores.
My way of looking at it is that capital market plays and all the exchanges and all, most of them have gone up too much. Of course, capital markets plays have corrected, and if you are, as you're rightly saying, that this expiry related thing, if it plays out, that might be a bottom of these companies. These companies are good quality companies, no doubt. All the exchanges and all the capital market plays. But right now, my view is that I'm very bullish on economy, and I would like to play economy through financials. And that is why I'm very bullish on companies like Tata Capital, which has got a very muted listing yesterday. But I would like to say that, when the CEO of Tata Capital, Mr. Rajiv Sabharwal, has said that if the economy growth continues at current rate and what is anticipated after the GST cut and income tax rate slab increase and of course interest rate cuts, then they'll double the loan book of 2,30,000 crore in 3 years, and with ROA improvement coming from credit cost itself coming down from 1.4% to below 1%. So that's a 40 bips ROA kicker itself. So I think the EPS CAGR can be 34% in this case. So I would like to play it more through financials who are lenders rather than capital market plays, which can be volatile because of various global news.
Parag, do you have a view specifically, good morning, on BSE? We reported yesterday, I don't know if you saw, you said, because you have the view on capital markets we got, but the exchange specifically, I don't know if you have a view, because SEBI's thinking on restricting weekly options seems to have been restricted. Stock reacted to our story, was up 4-5% at one point. It's off, I think it's from the lows, it's come up about 20%. But if this was the big overhang, if this goes away, could be meaningful. But you got to like the business, underlying business in the first place. Your thoughts, Parag?
No. So my point is that, yeah, these are great businesses, right? Infinite ROC businesses. So definitely I'll also have a look. But right now, as of now, I'm not having this stock in the portfolio, so I would refrain from commenting on it.
Okay, just a quick word on, if you will, and we'll put out the numbers, etc. as well. LG Electronics, right? Listing is today, and large IPO, larger listing, I guess, and perhaps enters the 1 lakh crore club, market cap club, right at the first tick. What's your sense, and what should investors do? Those are the lucky ones who got the IPO and allocation. What should they do, Parag?
Yeah, they should hold on. Definitely, that they should hold on. Because I saw the numbers, it is even at 1 lakh crore, it will be just 40 times FY27 earnings. And with a ROIC of above 60%, and clear dominating market share in washing machines and inverter AC and various other things. So I would say it's a good white goods play, strong brand, MNC, fantastic parentage, and very high ROIC business. So I would like to say that this is a good, and you have to have one of those in your portfolios, right? And unfortunately, the listed ones are not doing that well, already listed ones. So I would say that this can be a must-have in the portfolio stock.
All right.
India's consumption story, especially after the GST cuts and whatever has happened after the government has shifted focus to consumption-led, demand-driven growth for the economy.
Okay, all right. Parag, I want to ask you about metals as well, because, ArcelorMittal has gone ahead and increased prices in Europe by around 20 euros approximately. So it could have some kind of rub-off on Tata Steel. But we'll come to you in just a bit. For the time being, let's bring into the discussion Mr. Vimal Kejriwal, the MD and CEO at KC International, joins us on the show. And the top 3 talking points we're going to be focusing on: the latest orders wins, are they on track for the 30,000 crores of order inflow for FY26, and the order pipeline with the company is L1 as well. Mr. Kejriwal, good morning. It's always a pleasure to talk to you, sir. The last time around we had spoken, you had hinted, you're in L1 in a few positions and that could get closed out. Another big order win is what you've announced late last evening. So give us a few details. What kind of margins will you enjoy on this? What is the execution period? If you could give us some color, over how many months?
Good morning, Nigel.
Morning.
So these projects are, T&D projects. So typically the margins would be on around, 10% plus. And execution period for them on an average is around 18 months, because one of them is 21, one is less than 1. So I'll say average is 18 months.
Right. So we've got that out of the way then. Give us a few more details. I think a year-to-date inflow is around 15,000 crores order inflow. You could correct me on that number. And I think you'll be looking at around 30,000 crores. Normally, the second half of the year sees higher amount of ordering. So you remain reasonably confident that you get there?
So yeah, the numbers are right. We are at 14,000, roughly 13,900 and odd for this year. We have another L1 of almost 4,500 crores. So we are hoping that that gets converted in the next few weeks or so. And I think overall, we seem to be quite okay on 30,000 crores, maybe 1,000 crores here and there. But I think we are still on 30,000.
Okay. And what about prospects, sir, in terms of the pipeline? If you have to split it up between India, the Middle East and other parts of the world, how do you see tendering activity? How do you see the kind of pipeline? How are things panning out?
If you look at the overall numbers, the tender pipeline for us is around 1,50,000 crores. Okay, of which I'll break it up slightly differently. T&D is around 65,000 crores, and the rest is civil, renewables, etc. In international, right now we are more or less only on the T&D side. So that order tender pipeline is around 30,000 and odd crores. Rest is all India.
Okay, all right. Any movement with regard to collections? I remember when we spoke last, particularly on the water side of business, things were slow. Obviously, it's a short duration since the last time we spoke, but is there some kind of sense in terms of improvement out there?
So the states are now talking about giving money. So we did receive some money from Orissa, which was a problematic case for us. MP, so we are only in 2 states, MP and Orissa. MP has been paying. Even last month they did something. Orissa also did something. So I'll say that there's some movement has started.
Okay, and the total collections due on the water portfolio is how much?
I don't have the exact number, but it would be around 700 and odd crores, 600, 700 crores.
Okay, all right. Final question, sir. We're going to chat again post the numbers, but I think revenue growth you were talking about was around 15% and margins of around 8.5%. Any tinkering around out there?
No, I think for the year we are okay with the revenue growth. Margins, I think I'll say around 8% is what we are very clear. 8 to 8.5 is what we are targeting.
All right, Mr. Kejriwal, appreciate you joining in and filling us in with all those details. Congratulations on another big order win. As you're saying, the pipeline's looking good. Second half of the year is normally better. So we'll keep an eye out on that front.
Thank you. Thank you so much.
Well, just a quick note for all our viewers. As you can see on the screen, there is a money control stock score just above the line graph. This is a score assigned to each stock based on Money Control's multi-factor algorithm. It is calculated by analyzing over 40 parameters, including both current and historical financial statements, price charts, and technical indicators for each and every stock. Each of the individual parameters are considered for calculation of the 4 factors, and they're assigned a score, which is then aggregated to arrive at an overall Q factor score, G factor score, V factor score, and a T factor score. But remember, this is not a buy or a sell recommendation. Any investor or a viewer is advised to carry out their own necessary due diligence on their own or through a certified registered financial advisor for any investment decisions. We will get into a break. On the other side, we'll talk technicals and we'll invite Mitesh Thakkar and Sudarshan Sukhani on the show.
Welcome back. There's about, 11 minutes to go for the pre-open session to kick off. There is an important corporate development with regards to Tata Motors. The Tata Motors CV business demerger is effective today. So let's just revisit this with Sudarshan, who's joining us. So good morning.
Morning, Prashant. So Tata Motors will be in focus. So let me first tell you the news. If you remember, Tata Motors had announced that it would demerge commercial vehicle business and 2 companies will be formed. First one, Tata Motors passenger vehicle, and second one would be Tata Motors commercial vehicle. Now the demerger scheme gets effective today. So how will you know the value? There will be a special pre-opening session, and that will be from 9 a.m. to 10 a.m. on both the exchanges, BSE and NSE. So once after the pre-opening session, the price that you would see on the screen would be for Tata Motors passenger vehicle. Now, commercial vehicle business will be listed separately, and that will happen after 30 to 45 days. That date is not known yet. We'll get to know after the company after a few days. So now Tata Motors passenger vehicle business will have first India passenger vehicle business, second JLR, and third the company that holds stake in Tata Technologies. Commercial vehicle would be have India commercial vehicle businesses. So how do you know the value? So we have few brokerages who have first JP Morgan values total Tata Motors, it has valued at rupees 700 per share, for which JLR's value is rupees 236 per share. India business is at rupees 436 per share, and for the stake that company holds in Tata Technologies, for which the value is given of rupees 26 per share. For India business, passenger vehicle is valued at rupees 130 per share, and commercial vehicle business is valued at rupees 306 per share. As per Nuvama, overall passenger vehicle business, India PV plus JLR plus stake in Tata Technologies, total value is rupees 365 per share, and for commercial vehicle 367 per share. As per Nuvama, PV is valued at rupees 410 per share and commercial vehicle at rupees 280 per share. Apart from this, also company has got the corporate affairs ministry's approval to change the name of the company to Tata Motors passenger vehicle for India PV.
A very, very exhaustive explanation there. So thank you very much for that. Parag, you heard the Tata Motors, the demerger, and of course how it breaks up in terms of value. Your thoughts?
So my view is that, see, ultimately all Tata Group companies are great companies. Under Mr. Chandra, they have all done a fantastic capital allocation and value unlocking whenever required. So I would say that from long-term perspective, yes, but from short-term perspective, JLR's performance needs to be monitored before buying Tata Motors stock. So we don't have it in the portfolio, but of course it is in our radar. And whenever we see some uptick in JLR, we would jump to buy the stock. That is my clear view. because then that might be at a higher price because you always have to pay price for certainty in the market. But JLR is a very important piece which we cannot ignore in Tata Motors.
Now got that. Parag, we'll take a quick break here. We'll come back and continue some of this discussion. 8 minutes to go for the pre-open session. So that's coming up. More coming up. So we want to touch about RBL Bank as a stock as well, right? I mean, that deal perhaps getting closer and closer. So we'll ask Parag about RBL as well and put out a small piece. Stay with us. Coming back.
Welcome back. RBL Bank is a stock we're going to focus on. Remember, in the last, I think, 2 months or so, it's definitely outperformed what the Nifty Bank has done. We have a money control report that's suggesting that Emirates NBD is all set to pick up a majority stake in the bank. Gaurav joins us to help us out with a quick analysis on that. Gaurav?
Well, yes. Now, a news report suggests that Emirates NBD is looking for a majority stake in RBL Bank. In fact, they have also mentioned that both the companies have been talking for months, and Emirates NBD is actually interested in buying around 51% stake in RBL Bank. Now, remember, with this, IDBI Bank is also going to be in focus today because Emirates NBD was one of the names which was flashed in the reports where it was mentioned that it is one of the front runners for stake in IDBI Bank as well. But let's not forget about what is happening in RBL Bank. Fundamentally, if you look at RBL Bank, it is at a good stage right now. It is at a juncture of turnaround because they are saying that ROA is going to reach around 1% by the end of FY26. And at the same time, even if you look at valuation, that is attractive. It is trading at just 1 times price to book value versus the average of 0.7 times. So definitely, it looks like RBL Bank is at an attractive stage. But at the same time, let's not forget about the regulatory action. Now, regulators suggest that any single investor's voting right are capped at 26% for any listed private bank. Now, any changes which are required to be made will need legislative changes because these ceilings are prescribed by Banking Regulations Act, and experts believe that such legislative changes will take time because it is going to be a long process. When we look at the previous instances, we have already seen some of the instances happening in CSB where Fairfax picked almost 51% stake back in 2018, but that was a different case because the exception was made as capital availability was low and it was for the struggling bank which was CSB at that time. But for RBL Bank, if you look at capital adequacy ratio and CET1, both these ratios are well above the prescribed limits. When we look at other deals that have happened recently, we saw Warburg Pincus actually picking around 10% stake in IDFC First Bank. Sumitomo Mitsui, there also RBI gave 25% approval for 25% stake in Yes Bank. So definitely, when we look at RBL Bank and the 51% stake as reported by Money Control, it will be really interesting to see how it is going to happen. And it is definitely going to be time consuming, months if not years. But for now, we will be focusing on RBL Bank and see what happens and how commentary is will come from the management in the results ahead.
Okay, all right. Thanks a lot for that. Gaurav, Parag, what's your view? RBL Bank, valuations still seem to be a little bit in favor. Stock has seen a massive run in this year. My director will just pull up, maybe a 3-month, 1-year chart of RBL Bank and the Nifty Bank. Your view on it?
So we hold it in our portfolios, very small weight, 2% weight. So I would say that, the appetite of foreign investors for financials of India is fantastic. And that is why we bought it actually. After seeing that, Sumitomo of Japan bought stake in Yes Bank, a 24% stake. Then IHC bought stake in Samman Capital. So all these small financial entities, they get a very good value and they get I would say that they are up for grabs. Plus, the latest business update of RBL also indicated that they will see a lesser margin compression or even a 5 pips margin expansion QOQ. That also attracted us towards the stock. So I would say that fundamentally, as you rightly said, at one time book value, there's nothing to lose much. Apart from the fact that stock has rallied very well, so it might see some profit sometime. But I would say that Indian financials are completely in favor in terms of attraction from foreign investors, and and that should be the case because it's a highest growth country, and definitely we see very good future for next 18 months after all the steps which government and RBI has taken in last 6 months.
By the way, Parag, do you own any of these silver ETFs? Or are you allowed to? Or any thoughts?
No.
5-6%. It's like a...
yeah, but I would like to say that this is actually parabolic move, which I would hate to participate in. I mean, I could have participated earlier, but as of now, I am not seeing any great. I'm happy to miss kind of situation for gold and silver right now. These prices I cannot buy.
No, absolutely. Understood. Parag, thank you very much. Good speaking with you here on CNBC-TV18. Appreciate your time. Rupees opened up about 10 paise weaker compared to yesterday's close. Sudarshan Sukhani and Mitesh Thakkar are with us with what they want you to do with regards to specific trades. Gentlemen, good morning. Great to have both of you here. Sudarshan, you go first. I mean, Bank Nifty, positive close. Nifty slightly negative off the lows by a lot. Direction of travel remains constructive. Sudarshan?
Yeah, good morning. Yes, it remains constructive. Sometimes markets do nothing. Today is also a weekly F&O expiry, and it is possible that market, the Nifty or the Bank Nifty, in any of them or both of them, could actually drift sideways today as they did yesterday. But that doesn't change the trend. The short-term trend is up. Till that is not cancelled out, we'll have to assume that we are buyers on dips, and that is the suggestion I take. How will it be cancelled out? If the Nifty closes below 25,100, that's a close. Then we'll say something has changed and we'll step out. But for the time being, look for an intraday dip and go long.
Even yesterday, when same time when we were chatting, Sudarshan, and there was a gap up opening, which seemed very likely. Your call was to stay positive, and markets are headed higher. But Mitesh, you were looking at 24,350 as a potential resistance for our markets on the way up. Now, this morning looks like there will be some green start. What would be the trade on the Nifty and even the Nifty Bank, which has been doing well?
Good morning. So, I absolutely agree with what Sudarshan said. 25,100 is an important level, and any declines would be buying opportunities. And 25,350, 400 is the zone, which once the Nifty clears, there is a good chance of a strong momentum coming on the upside. So these are the two levels which I'm watching closely. For the time being, the bias of the indicators and averages is positive, so I'm more bullish, hoping that the breakout will eventually happen, if not today or tomorrow, in the coming few days. And therefore, we should possibly be preparing for some more upside. Having said that, the Bank Nifty has already, started slightly outperforming the Nifty, and it's met the first target of 56,500. The next target which I have is 57,000 to about 57,250. I think that's where the Bank Nifty could be heading.
Got that. Mitesh, morning. What are your trades?
Morning. I have 3 buys to a sell. On the buying side is Bajaj Auto with a stop at 9,000. I recommend long positions here for a short-term target of 9,200. Also, buy on IDFC First Bank. Now, yesterday the stock was down a bit, so it gives you a good fresh entry point. So buy here with a stop at 72 for targets of 77. Bajaj Finance made a fresh swing high, so that's a buy as well. Keep a stop at 1,022, look for targets of 1,065, and one sell call, that's HUL. Keep a stop at 25.12, look for targets of around 24.50.
Sudarshan, what would your stock calls be?
Yeah, I'll just discuss my stock calls, but to answer Prashant, I own some very small lots in silver ETFs. And that's not making me happy. No, it's not. Even though it was purchased last year, because now I'm riding a tiger. How do I get out? I have no idea at all. All right. So now for the stock.
I think that riding the tiger is a phrase that Sudarshan, you would well remember, right? Yes. Infamous line. But anyway, I guess you got to just get off at some point but last night I think silver was up again. it's taken out that $50 resistance. Twice it's got to about $50 odd dollars, and I think we're past that level now. So who knows? There seems to be a bit of a scramble for silver here. But your trade, Sudarshan.
Yes, that's right. And the spot is higher than futures. Yeah. That's strange.
Yeah.
Bharat Forge is a buying opportunity. Bharat Forge is a buy with a stop under 1210. Lupin is a buy with a stop under 1930. And I have one intraday short, ICICI General Insurance. It's an intraday short with a stop above 1870. And finally, Chola Finance is a buy with a stop under 1620. So 3 buys, Bharat Forge, Lupin, Chola, and one intraday short, ICICI GL.
Got that. We'll chat with you guys through the course of the day. For now, let's focus on hospitals and diagnostic space. Now, Centum expects the hospital revenue to grow by 17% on account of an increase in bed capacity. Rising share of the wellness segment will also help diagnostic companies. To discuss this and more, we're now joined by Sumit Gupta, AVP Research at Centrum. Thank you very much, Sumit, for joining in. Let's start with the broad call that you have on diagnostics and hospitals. What is the thesis that you're growing with for the next, say, 2 to 3 years?
Yeah, hi. Good morning. Thanks for having me. So regarding the hospitals, so majority of the growth will likely be coming from bed additions on a YOY basis. And apart from that, you can say 4 to 5% growth in the ARPOB. On the diagnostics front, it will be likely led by volume growth and a bit of mix change. And it will depend on company to company, what kind of strategies that they are building in. Let's say for Dr. Lal, they are primarily focusing on volume growth and a slight improvement in mix. And some other companies are like Metropolis, they are also focusing on volume growth. Apart from that, price growth is also there. So it is very company specific.
In hospitals, which stock do you like the most right now and why?
So it is Aster DM and Max Healthcare, which we like on a continuous basis over the next 2 to 3 years. Max is likely because if you see the kind of expansion that it is going through, majority of it will be brownfield expansion, nearly 70-75%. So that will lead to lower margin dilution and higher ROCE. So in that case, we remain positive on Max Healthcare. And with respect to Aster, we see the care merger will be done completed by Q4 FY26, and in that sense, you will see basically it is becoming the top among the top 3 hospitals, biggest hospitals in terms of bed capacity in the nation. And if you see the overall geographic expansion and apart from that, the financial metrics are also expected to improve a lot.
Yeah, Aster is Sumit. Hi, morning, Prashant here. Aster is the one which took over. A quality care, right? I mean, that was the big merger which had happened. That Blackstone.
Yes.
Okay.
Quality care and Aster, yeah.
Yeah. I think 10,000 odd capacity now. But with hospitals, Sumit, are these quarterly numbers? Because I'm assuming it's a business where you go through a phase of expansion, adding capacity, and then a couple of years, you stabilize it. Then you go on another spree, of expansion. So these are the Max and Aster are kind of sort of tactical, based off of your view of what second quarter will look like, or I mean slightly more sort of longer term opinion here.
It's a slightly longer term point of view. Max and Aster both in terms of the kind of alpha generation capability that these two have. So this is where I believe Aster is the number 1 and followed by Max in terms of that the alpha generation capability. However, the point that you highlighted that hospitals, first of all, they do expansion, and for quite few years post that, there is a lull period in terms of no expansion. So that is the nature of the hospital industry. So let's say for 3 to 4 years, these hospitals expand, and then you will see a slight dip in profitability. And once the expansion stops, in that case, the ROCEs improve. So that's the quality of nature of basically you can say the industry fundamental.
Absolutely. Do you have coverage on HCG,
no.
Sumit?
No.
Okay. What else do you cover in that space?
So Max, Vedanta, Aster, Rainbow, Yatharth, Artemis.
Okay. Okay. Is there there's a company called, I think, GPT Healthcare, Calcutta-based. Ever looked at it? Small company. But
it's a good company, but I won't be able to comment more on it. However, remains in a good stead in that particular market. So that's a growing market as of now, and there's a lot of focus from other hospital players also in the east and northeast region, especially Raipur market also.
On diagnostics, what is the call? You were talking about how volumes will be the big driver for growth. I mean, what is the top line EPS growth that you expect for this sector? And which stock do you like the most here?
So within the diagnostics, I like Dr. Lal. And overall basis, I expect around 12 to 13% kind of growth on the revenue side, and similarly on 14 to 15% kind of growth on the earnings side. Dr. Lal, I like it is largely because the majority of the growth is coming from the volume, basically volume growth, and not deliberately taking a price hike. And if you see positive operating leverage also playing out in terms of the margin expansion for Dr. Lal.
What about on the competitive side? I mean, they've gone through a period of very high competitive intensity, pricing pressure. Is that now coming to an end, and are we looking at price increases now going forward?
Yes, the kind of competitive intensity that we have seen over the last 3 to 4 years, it has more or less now abated. It is more of the incumbents and the competition from the hospital-based labs, which is the predominant theme as of now. However, if you see the majority of the competition is between the routine and the semi-specialized test, and that too into the pathology segment largely. So the companies which are into specialized and super specialized testing, they will continue to do well.
This time, Sumit, for diagnostics, as CEO was, or maybe that was the last quarter, actually this quarter, right? The dengue season was, thankfully for you and me, it was not a bad dengue season. Right. But not great news for diagnostic companies. Yes, but that's a big variable, isn't it?
Yeah. So basically, we will see a slide down, basically lower revenue growth with respect to the diagnostic companies. So basically, it was a continued monsoon season. In that case, there was lower footfalls in the diagnostic labs, pan India. So we will see a lower volume growth.
Yeah, no, absolutely. Good speaking, Sumit, and hope to connect once we have the numbers with us, right? And the report will invite you back for a review in terms of what you like. But Aster and Max from a hospital's perspective is what Sumit is focused on from a longer term perspective. Sudarshan is back with us, so is Mitesh for their 9-10 call. Sudarshan, you go first. What do you have?
Chola Finance, buy with a stop under 1620.
Chola Finance. Mitesh, what about you?
I'll go with a buy on Bajaj Finance for targets of around 1,060.
Okay, 2 NBFCs, Bajaj Finance from Mitesh and Chola Finance from Sudarshan. Thanks very much, both of you, for that. Well, HCL Tech is what we want to revisit very, very quickly in terms of what the street made of the numbers. Rima, take it away.
Well, let's just, we spoke about the numbers and how they're a beat on revenues, margins, deal wins have been very strong. So now let's just quickly run through what the brokerage call is. Now, Jefferies, Nomura, CLSA are all bullish on the stock with an average target price ranging between 1660 to 1730. On the flip side, Citi and MS, as you can see, are neutral on the stock. Now, why the bullish call generally? One, Q2 was a strong performance. And secondly, as Jefferies points out, the company raised the services business guidance. Raised as in tweaked it. It was earlier 3 to 4%. Now it stands at 4 to 5%. But this would mean that it would be amongst the fastest growing large cap IT companies. And therefore, according to them, it deserves premium valuations. What next? The current margins for HCL Tech stand between 17 to 18%. But previously, it used to enjoy margins of 18, 19, 20% also. So the aspiration is to get back to that. So as CLSA points out, the margin recovery to 18 to 19% next year will be the key for re-rating from here on. And MS also says that because we do not have clarity on when margins get back to the historical levels, we are not upgrading the EPS for now. But a good set of numbers, and the bell has gone.
Absolutely, and I think we've got the market opening first rates coming up, 25,227, the sensex at 82,400, and just starting with basically a reflection of what we had overnight as well. Overnight you had a nice rebound coming through, and I think it's showing up here as well. The Nifty Bank ended in the green. It's now slipped into the red a little bit, but just absolutely flat. We've got mid-cap index, which is up about 0.4. By the way, the market breadth was 2:1 in favor of declines. Although, if you had to find volumes on stocks, it was all on stocks which were higher. So, lots of single stock action. And that's why it didn't feel like market breadth was negative or broader market was selling off or anything of that sort. We have a flattish kind of rate now on the Nifty Bank. The broader market 1/3% higher, and the Nifty heat map up on your screen. HCL Tech, as Reema pointed out, on one end it's responding to numbers, and on the other end you've got Dr. Reddy's, Cipla, and actually a bunch of pharma names. But it's overwhelmingly in the green. And then you can see that blue stock, right? I mean, that's Tata Motors commercial vehicles. We'll have the rate up for you in a bit. Reema.
Well, the interesting mover today is LG Balakrishnan. It's not connected to LG Electronics. It just shares the first two, letters, LG. But that's a stock which I last checked and had opened with a gain of close to about 6%. But remember, it's unconnected to LG Electronics. LG Balakrishnan is an Indian company. It operates in the automotive space. But the street is clearly getting excited. But as Prashant pointed out, the top gainer right now is HCL Tech. The street likes the performance. The stock is at 1523, a gain of nearly about 2%. Other IT companies are also moving up. Tech Mahindra, which reports numbers later today post-market hours, has opened with a gain of 1%. Here the street is watching, the investors are tracking whether the margin improvement, continues. The company had laid out a 3-year roadmap for a turnaround under Mohit Joshi that comes to an end in FY27, so 1.5 years to go. But by the end of it, Tech Mahindra wants to achieve margins of 15% and industry-leading growth. The progress to getting there will be tracked very closely. So Tech Mahindra, Wipro, Infosys all up in the green. Reliance Industries has opened up higher, up nearly about 0.5%. Metal names active. It's a fresh 52-week high on Tata Steel and Hindalco with a surge of close to about 1%. Jio Financial gaining ground. On the way down, some pharma names are a bit subdued. Cipla, Sun Pharma, Dr. Reddy's in the red, and Maruti Suzuki is down close to about 0.5%.
Well, that's right, Reema. A few stocks that deserve special mention. Hindustan Zinc, that one's up close to 3%. That's the only play that you have on silver. It's going to be tricky, but that has silver exposure, so that's why that stock continues to move up. It's up close to 3%. Float as well, reasonably limited on that one. The other two stocks that we pointed out earlier today was MCX. The premium on a daily basis is moving up. That's another way of playing this entire move with regard to commodities melt up. So that stock continues to move up 3.5%. BS is the other one. As we said, that weekly contract, risk to those contracts could be receding a little bit after our colleague Yash had broken that story yesterday. The stock is up close to around 3% on the back of that. So good move is what we are seeing. Another interesting name, which could be a bit of a positive rub-off, is overnight you had Bloom Energy, and data center. There was a deal that was linked between Brookfield as well as Bloom Energy. They have announced a tie-up worth around $5 billion. And because of that, a stock like MTAR could be in focus because it's a key supplier of hot boxes to Bloom Energy. So that explains why MTAR is up close to around 3%. Volume's not very, very high, but that stock's doing well. And KEC, management joined us earlier today. They were celebrating the order win. They said that the pipeline's looking good as well. So that's up another 2%. In RBL Bank, unconfirmed reports suggest that, in fact, there could be a deal in the works. We'll have to see what happens. Stock has been a relative outperformer. Today up close to around 2%. Prashant.
No, absolutely. So lots happening, right? I mean, in terms of individual names, individual stocks as well. So it's 70 points for now, 25,286 at this stage, at this point in time. We have Nimesh Chandan, who's now joining us. He's right here in our studios, Chief Investment Officer at Bajaj Finserv Asset Management Company. Nimesh, great to have you with us here. Thank you very much for joining us.
Pleasure to be here.
So you're basically back knocking at the upper end of the range on the market. Do you think enough in the tank for the market to head higher, or it's going to be, there is no burst higher which is waiting to happen. It's going to be slow grind up. What's your sense?
So there could be certain events that can just
open
the top.
Yeah, that should take us to the highs, which is the US-India thing, right? Whenever that happens, hopefully sooner. But that's like a one-time thing, whenever that happens.
So I have been working with the theory that markets are like a coiled spring right now, where you've seen economic cycle doing better, corporate cycle doing better, credit cycle now picking up. The only missing part is the sentiment cycle. And that should start hopefully changing with some of these news flow behind us of, say, tariffs and trade agreements and so on. Except for, say, IT sector where we are underweight. Otherwise, from consumption, pharmaceuticals, real estate, capital goods, we are quite bullish across the space. You're not getting valuations at the very cheap, but they are not very expensive. So there is enough to actually select and build a good portfolio for. So very bullish on the markets. Yeah, second half, this half, we should see a new high for Nifty.
Yeah. In terms, when you look at markets and what to do, is the approach more, I mean, not so much sectoral, okay, we like this sector, we like that sector, we don't like this sector. Is it very individual, sort of, specific companies? Because I was just looking at a list of NSE 500 this year, and this is a year where, obviously the index has not done very much, point to point, but lots of 30, 40, 50% kind of movers, right? All from a variety of areas.
Absolutely. I think market is still giving a premium for growth. And wherever there is visibility for growth in the future, market is giving a much higher premium there. You can take quick commerce companies or recently the move in CDMO companies, CRAMS players. You can see that valuations are high, but they're moving higher because the growth visibility is there. We were analyzing about the BSE 200 companies. So we took those 200 companies and we were looking at, let's forget price to earning ratio and price to book. Let's look at upside given by analysts. So we took the best estimates. Now this is Bloomberg data, where best estimates of all the analysts, what is the average target price that they're looking at. Out of 200, about 6 were not covered by anybody, or the estimates were stale. Out of the 194, 19 had downside. The rest, 175, had an upside. And out of those 175, 110 had a double-digit upside. So which means there is enough to play to pick up. And as you said, you may not want to go just sector-wise or so. In some cases, you might. Like, for example, banking and financial services, you may want to go on a top-down approach. But on a bottom-up approach, you can take a stars approach. You can pick the best from each category and create a good diversified portfolio, which is giving you enough play from both large caps, mid caps, and small caps.
Just briefly recount the statistics once again, BSE 200.
So these are for a few days back. So what we did was we took, now analysts can be bullish or bearish. So we took an average estimate of theirs. So for BSE 200 companies, let's take the average target price for 1 year, whatever the analysts are giving. From there, out of 200, 6, as I said, did not have fresh estimates. Let's say the estimates were stale. So you are left with 194. About 19 had a negative price target. It can be minus 0.5% also. It might be minus 10%. So 19 of them. That means 175 had something positive to look forward to. And out of that, say 110 had double-digit upside, so above 10%. Now, if we are like about 5-6% away from the highs, right, in terms of all-time highs. For the market to scale that, I think there are enough stocks to help scale it because they are trading below their intrinsic value. Here, I'm not taking the most bullish estimates. If I take the most bullish estimates, then the numbers can be much higher. But just taking these average estimates, thinking that the crowd on an average will be right, we still have upside.
Nimesh, I remember chatting with you same time last year. You had come down to the studio, and at that time, you were giving us your contra bets. And it was all about the capital goods, defense stocks, industrials, which were right on top of everyone's buy list. And you said it's time to move away from there and get into consumption. And that theme has played out. It was consumption, chemicals, and pharma. I was just going over my list. These were the 3 contra calls that you made last year. Now, as you look ahead for the next 12, 18 months, tell us, how would you construct your portfolio and what would be the contra value bets now?
So some bets you will want to continue. So for example, consumption you will want to continue. Pharmaceuticals, I think, is coming out of a de-worrification, as I would call it. There were many worries. One by one, every worry got sorted. Like generics will be allowed. Trump is not putting any new tariff on those innovative or branded drugs, unless, of course, you have some estimate of having a capacity in US. But the big contra bets will be real estate and metals from here. Moving into hard assets. Real estate in India is doing well. Prices have been compressed. Last year, it's one of the underperformers. And now there's value emerging there. With lower interest rates, with more income in the hands of people, real estate can definitely get a boost. On the other side, metals, I think after the move we've seen in gold and silver, I think the industrial metals are next to go. And here, if you see, on an average, if you see last 10 years, metal prices were more hovering around an average, where the costs of mining, sustainability costs were going up. And now emerging markets have started doing well. And we'll realize that as emerging markets urbanize, as they do counter-cyclical policies, the metal consumption demand starts moving up. On the other side, you will also find some kind of supply constraints in certain metals, say rare earth or so. So I think metals and real estate, these two are contra plays according to me, where you're getting companies at say replacement values or near the book values or NAVs, and you are able to see growth coming.
Nigel, I just want to highlight for our viewers, if you can pull up silver Bs. Silver Bs are up 8%. Yeah, I mean, it's just absolute bonkers of a move, right? And by the way, this week, silver Bs 15% higher, if you can pull that up. And it's basically 110% this year, 30% from the start of this month. So, and we can have those up. Yeah, there you go, on your screen now. 9% on, that's UTI Silver ETF, 7%, Nippon HDFC 6%. So this is some kind of, I don't want to use the word lightly, but a bit of a small parabolic kind of a move. Is what you have going, Nigel.
Well, Nimesh, good to have you on the show as well. So we've gone through some of those trends. I wanted to ask you about another trend that we haven't spoken about, the internet themes. You know, people were brushing it aside, but actually, you know, for those daredevils, so to call it at that point of time, you know, the big money has been made out there. Do you think this internet theme, these new age stocks, they have a longer runway, or do you think, you know, they've done their bit for now, you'd rather stay away?
So what we've seen is in technologies, there is always a hype curve that people get excited about something, project that growth rates will be, I mean, path will be very smooth and give it very high valuation and all the players will benefit. Then you have the disappointment where you have a chasm where everything falls together. And then selectively, these businesses which actually deserve high valuation start moving up. So that's what we've seen in the more of an internet space or the digital consumer companies or digital payment companies or so. So all these new age companies have earlier at the listing went through a hype curve. And now businesses that deserve are able to show that they can monetize these trends and grow consistently, have a business moat, those start doing well. So we look at customer ownership. We look at how much margins these companies are making. We also look at which are the investments which are for the present and which are for the future. Right. Many a times, the companies actually spend a lot during the initial years to gain customer traction. And then they are able to charge better or reduce those expenses to turn them into profitability. So if you see in the recent past, those companies which have shown good numbers along with good profitability have actually shown better performance.
In consumption, what's the best play? I know we've asked you this before, but rates keep changing. The subs themes also keep evolving. So now at this juncture?
So as I had said earlier also, I'm bullish from everything from FMCG, quick commerce till real estate. But from now on, if you want to see more upside, because after the GST cuts announced, there have been certain moves in the market. I think in many cases, the auto stocks have moved up significantly. Consumer discretionary pack as a whole has many opportunities where valuations are attractive. So in white goods or in home improvement spaces, you have opportunities where valuations are attractive below their average and the growth is quite good. Some of the themes may continue. So for example, consumer services, whether it is quick commerce, QSRs, those guys can continue. Unfortunately, Rima, here the attention went toward GST winners or losers. Not many people are accounting the whole impact, the wealth effect because of gold, the income effect because of income tax rate cuts. We are going to have 8th pay commission, which will be coming and giving a stimulus in a way to the urban consumption. People are not looking at the whole picture. People just tried to put numbers on GST winners and losers and decided which ones to buy. That's why you've seen very different moves in these sub-segments of consumption. But I think overall, consumption space for India, I think for next 5 to 10 years, it's the best space to be.
So there were quite a few consumption IPOs, right? There's an urban company, or there is LG Electronics now. We'll await the listing. I don't see Bajaj Finserv's name in the anchor investors. Is it that y'all participated and didn't get allocation, or y'all just stayed away? And if yes, why?
So when a sector is doing well and IPOs come in, we approach it a bit cautiously. I'm not saying all the IPOs are like that, but we have participated in few of them.
Which ones did you all participate in?
I may not be able to name as such, but I would say that in one of the books, I think Benjamin Graham's book, Intelligent Investor, there was a foreword by Jason Zweig where he writes, IPOs in bull markets should be defined as it's probably overpriced. There are many good companies available in the secondary market which are available at good valuation. So we want to benefit from that rather than just chase IPOs.
There's a bit of a FOMO bit as well, right? I mean, you want to chase. I mean, there's a bit of a chase going on. But the chase for most things.
True.
What else? We were talking about data centers, etc. Right? I mean, TCS has announced a little bit. I'm not talking about IT services and TCS specifically, but have you looked at anything there? Any companies?
Yeah. So there are some mid-cap, small-cap plays where you have companies either providing equipment or some kind of a part of value chain of the data center. So some MNC listed companies are part of it. We actually benefited hugely from the power sector because of data centers. Because there's a huge run for, these are power guzzlers and people are looking to set up either pocket-sized nuclear plants or invest more in transmission and distribution. There were about 3 companies in our portfolio which are MNCs, which are into high-end T&D.
GE Vernova is one.
So there are 3 of them which actually are the biggest in these HVDCs and all. So we have all 3 of them since last 2 years, and we've seen them multi-bagger returns on
do
that.
anything else.
Since you like real estate, what about these flexible co-working space? Lots of companies, 3 of them got listed recently, SmartWorks, IndiCube, and then WeWork, or even REITs, where you have a play on commercial real estate. There was Embassy. I mean, because the broader call on real estate is positive, where do you stand on these 2 segments?
Very positive on both. However, in REITs, I think after the run-up that we've seen, maybe your yields are lesser. So though they are equity, but their yields in terms of dividend yields or interest yields are lower. In terms of co-sharing spaces, office space sharing, we are very positive. So that's a business, if you crack it right, if you have the right real estate, the cash flows are fantastic in these businesses. Initial years of investment are there, but then you go through that J curve where the cash flows are fantastic. So quite positive on those spaces. And I think good that so many companies are getting listed. This can become a very interesting asset class that people will look at.
So with disclosure, can you tell us what you have in your holding? I'm sure people can find it, but if you could just tell us, it'll be easier.
So there are 2 listed, both are in the portfolio, and the 3rd one is coming, we are considering.
This is on co-working?
Yeah.
There are 4 listed, no? There's Office, there's WeWork, there's IndiCube and SmartWorks.
2 are with us, so I won't name them.
All right, Nimish, we'll leave it there. Thank you very much. Great chat as always. Appreciate you coming down to the studios. Thank you. Well, I think what we're going to do is, as we head and run into the LG listing, LG Electronics listing, get an Upasna. So we'll look at LG and we'll play out some sound bites of our interview interaction with the management as well. What are valuations looking like? And of course, what the price was offered at. But of course, it's not going to be at listing. It's going to be higher. But how are things stacking up now compared to peers? Upasna, take it away.
Good morning. Well, the most awaited IPO, that is the LG Electronics IPO, set to list on exchanges. Now, we are expecting a blockbuster listing, and the price band of the issue is around 1,080 to 1,140 per share. Now, company seeks an MCAP of nearly about 77,380 crores, looking at the higher end of the offer price. Now, mind you, this is entirely an OFS, and the promoter stake post-issue stands at 85% versus 100% now. Now, the company has raised nearly 3,475 crore from the anchor investor, and the subscription levels are at a bumper level. It is the first Indian IPO to cross bids over 4 lakh crore, and overall subscription of this IPO stands over 54 times, with QIBs leading the pack. Now, this signals a strong market sentiment in even a healthy listing. Now, coming to the valuation, the company's valuation stands at nearly 35 times, which is FY25 EPS. Now, if we look at the main listed peers in the large appliances, that is Voltas, Blue Star, Havells, they are currently valued at somewhere around 40 to 40 times 1-year forward PE. So certainly it is conservatively priced. Now looking at the brokerages. Now brokerages, let's look at the brokerages stake. Now MOSL expects the stock to trade at a higher multiple given the strong fundamentals and the return ratio. They've initiated a coverage on this with a buy rating and a target price of nearly around 1800 per share. Now Ambit also says that the growth tailwinds led by under-penetration will continue to play out for the stock with premiumization opportunities across categories. It has given a 12-month price target of 1820, which implies a valuation of 43 times 1-year forward PE. Nomura has also given a target price of 1800 and Antique has given a target price of nearly 1725 per share.
Thank you very much for that comprehensive details there. In fact, we had a chat with the top management of LG Electronics earlier. They spoke about the reinvesting plan in India, their outlook. Listen in.
We are reinvesting here in India. We are coming up with our third plant. It's in Sri City, Andhra Pradesh, where our $600 million US dollar investment we are doing. We are doubling up our capacities. We are investing in new products, new technologies. We are also investing to improve the retail infrastructure in Tier 2, Tier 3 town, introduction of many new products. We are also scaling up our B2B business. That's our focus area.
Okay, all right, and let's focus on the other number that came in overnight that is quite encouraging. Anand Rathi, the stock is holding strong. Ria joins us to help us out with a quick revision of those numbers. Ria?
Well, yes, Nigel, good set for Anand Rathi in this quarter. The net profit has gone up by around 6% sequentially, coming in at 99 crores. Revenue also seeing an uptick of 9% sequentially at roughly 297 crores. Even the EBITDA has gone up by around 8% on a quarter-on-quarter basis. Net inflows, however, have gone down by around 22% sequentially at roughly 3,002 crores in this quarter. Now, overall, the company has seen continued growth in turbulent markets. And however, there is a slowdown in the AUM growth of the company, but these still do remain on track to achieve the AUM growth targets for the year. And on the back of this, the stock is up by around 6% at the moment.
Thank you very much for that. For the markets too, holding up with a gain of about 50 points in the Nifty, closer to 25,300. The Nifty bank is flattish today. So yesterday it did a bit of an outperformance, but today it's on the flatter side, despite the benign CPI inflation raising hopes of a rate cut coming from the RBI, but that isn't getting reflected in the price. I think it's IT which is doing quite well today. HCL Tech continues to be the big winner. Along with that, some other names in the metal packs. Tata Steel, ONGC, Apollo Hospitals amongst the top Nifty gainers. But let's now turn our attention to India's auto component space and to try and take stock of a few things. For starters, has the recent GST cut translated into lower costs, improved margins for the suppliers, or has the benefit been absorbed into the value chain? Secondly, festivities are on in full swing, but how strong is the pickup in orders? What's the inventory movement looking like? And finally, the rare earth magnet squeeze. It's a key concern for EVs and electronic components makers as sourcing challenges persist and costs are likely to stay elevated. Put all this in perspective and take stock of things with Sunil Chodia, Chairman Managing Director at Raj Ratan Global Wire, and Swasthi Shrikant Badve, promoter of Bellrise Industries. Gentlemen, thank you very much for joining in. If I could get both your views, and let me start with you, Mr. Chodia. The recent GST cuts, what has been the tangible impact in terms of order inflows that you've seen? And, what is the order book now looking like? Can you put a number to it?
For our company, because we are suppliers to tire industry and we are tier 3 suppliers, so the effect of all this boom in the auto industry and increased sales of auto, what we are seeing in this festive season, the impact of that will come little later on the tire industry, because 70% of the tires go in for replacement market and only 30% go in the original equipment. So, but definitely long-term perspective for tire industry is also looking positive, because there is a reduction of GST on tire itself. From 28%, government has reduced the tire GST on tires to 18%, and similarly on farm tires, it is reduced to 5%, which was previously 18%. So we are bullish, we are positive that our customers, which is tire industry, will make more and more tires and sell more tires in India.
Mr. Badvi, same question to you. Have you seen increased orders from your OEM clients, or will the benefit translate with a lag?
So I think there's been good growth across all segments, I think led by two-wheelers and four-wheelers. That was our hypothesis going into this festive season, that two-wheelers and four-wheelers would be the large gainers out of this GST rate cut. And I think a couple of factors that have come together. One is, of course, the pent-up demand up to 22nd September, where a lot of stockpiling was happening and consumers were waiting for the GST rate cut to happen. Second was the festive season itself that is kind of coming through. And third is the GST rate cut. So kind of three factors that are coming together to give this upward swing in volumes in the past couple of weeks in the festive season. And fingers crossed that it goes on in the next couple of months.
All right. Hi, Mr. Chaudhary and Swasthid. Good to have both of you all on the show. Swasthid, I wanted to ask you about the rare earth shortage. Has it impacted your business at all? You know, one of your clients is Bajaj Auto. And I recall in August, they had mentioned that there was some kind of difficulty in terms of production. Has it impacted your business, or is it par for the course and things have moved on since then?
While we can't comment on any particular OEMs in general, I think in general, the automotive two-wheel industry has been dealing with the rare earth magnet issue. We do feel that there's been a bit of innovation coming in from the OEMs with the development of new ferrite-assisted motors, which are magnetless motors. So I feel that could be one way in which OEMs can solve the issue in terms of scaling production while not being dependent on this rare earth magnet issue. I think apart from that, we're still bullish that the Indian government over time will, take the right steps in figuring out this issue and make sure that the Indian industry in that sense is Atmanirbhar.
Okay. All right. Mr. Chaudhary, coming across to you then. You're sounding quite optimistic with regard to prospects. I think when we spoke the last time around, you all were talking about volume growth of close to around 15%, mid-teens if I remember correctly, with margins in that vicinity of around 13 to around 15%. You hold on to that?
Yeah, we are in the silent period, so I would, avoid commenting on this. But we are looking at a growth of tire industry at 6 to 8% this year. Okay. And we'll have a major share of that pie.
Got it. Yeah, I mean, noted that you're in silent period, but what about exports? Because you have a fair bit of exposure to the international markets. Could you tell us, how are things shaping up on that front? Because a couple of quarters ago, there was some difficulty, but you were optimistic that things will gradually start settling itself. Has that taken place?
Yeah, so export is picking up well, and we are on track with our projections on export. Thanks to, there is no change in the reciprocal duty on our product. We fall under Section 232. So the export to US is still going strong, and we are keeping our fingers crossed that there's no new announcement which adversely affects us.
Okay, all right. Swasthid, your business, in fact, there's a lot of optimism with regard to the way ahead. And I think one shareholder wish list was that you have an unlisted business, which gradually will start getting folded into the listed business. I think that was supposed to take place at book value. Is there progress on that front? And should we expect something in this fiscal year itself?
Yes. So as we've spoken in the last two earnings calls, we do expect this merging or acquisition between the unlisted and listed entities should happen within this fiscal year. And we don't see any reason why that should not happen. So we are seeing internal progress, but nothing in particular that we can comment on publicly at this moment. But yes, we do feel that in this fiscal year itself, we'll be able to see this happening.
All right, got that. And also four-wheelers, it's a smaller percentage of your mix. Give us a quick guidance out there just to recap. What is the kit value, first of all? What is the contribution from four-wheelers? And how do you see both of them moving up? Contribution to the overall business and kit value as well.
Right. So right now, contribution to the manufacturing business is around 12%. As we had guided earlier, we expect this value in INR crores to double in the next 2 to 2.5 years. So we are still guiding for the same number, which is doubling in the next 2 to 2.5 years. Today, our kit value is close to 45,000 rupees in four-wheelers and commercial vehicles. We've just won a new order last quarter from a large commercial vehicle OEM for one of the larger chassis parts. With that, our content per vehicle is going up from around 45,000 to around 57,000. So it seems like we're doing the right things in terms of making sure that our content per vehicle is going up in commercial vehicles as well as passenger vehicles. And the good thing is that our growth today in four-wheelers and commercial vehicles is quite broad-based. So we have orders from 7 passenger vehicle OEMs and 5 commercial vehicle OEMs. So we are hedged across the industry. And irrespective of how OEMs do within themselves in terms of their rankings, we'll continue to grow given that we have exposure to more than 12, 13 OEMs in both spaces.
Okay, all right, Swasthit, as well as Mr. Choudhary, we appreciate you joining in and giving us all those details. As you all mentioned, we're in a bit of a silent period, but both of you all are optimistic on prospects of your individual businesses as well. Post your results, we'll re-invite you all and in fact get a sense with regard to how things are panning out. By the way, LG Electronics, the listing out there at a premium of 50%. So that's even higher than the grey market premium that the street was talking about of around 35 to around 40% approximately. Big uptake. And today, at least 5 notes is what I saw, actually 6 to be precise. And all of them had the target price in the vicinity of around 1,700 to around 1,800 rupees per share. For the time being, it's starting bang in that zone itself at around 1,710. And one more stock, Tata Motors, the passenger vehicle business. I think we should get the rate up for you. That's listed at around 400 rupees approximately. Yesterday was the last day to buy if you want to be eligible for both the shares. Today you have the PV business actually that's listing. So, that as well comes up for you on the screen.
Okay, so the way LG Electronics, the analysts have arrived at it, at 1140, it was trading at about 30 times forward multiple. It was 35 times trailing on FY25, but on FY27, it was about 30 times. But some of the peers were trading at about 40, 45 times. So analysts have arrived at, say, 40, 42 times forward multiple, and then you get a target price of close to about 1,800, which is where majority of the target price. I think there's one by MK, which is in excess of 2,000 rupees in terms of a target price. But a solid listing coming in on LG Electronics, 1,700 plus versus the issue price of 1,140. And on Tata Motors, the passenger vehicle has settled at a price of 400 rupees on NSE. I think it's seen a Nomura valuation, and I think that was about 365 for the passenger vehicles. All right, get into a break. As we do that, a quick note for all our viewers. As you can see on your screen, the Money Control stock score just above the line graph. This is a score assigned to each and every stock based on Money Control's multi-factor algorithm. It's calculated by analyzing over 40 parameters, including both the current and historical financial statements, price charts, technical indicator, and each individual parameter is considered for calculation of the 4 factors, which are and those 4 factors are then aggregated to arrive at an overall Q score, Q factor score, a G factor score, a V factor score, and a T factor score. But remember, this is not a buy or a sell recommendation. So anyone who wants to make an investment, please do carry out your own necessary due diligence or go through a certified registered financial advisor. Get into a break. On the other side, K. Suresh of Association of National Exchanges Members of India and Rajesh Baheti of Cross Seas Capital Services will be chatting with us. The sources tell us that SEBI won't change the weekly options expiry unless data shows heightened and unusual retail activity.
Welcome back. We've got the market, which is absolutely flatlined. And we're sort of, of course, coming up in 10 minutes is going to be the LG listing, the LG Electronics listing. But of course, indicative open is 40, 50 odd point premium on top of the issue price. We reported yesterday in the last hour of trade is that the SEBI's thinking with regards to what they want to do on the derivative side, especially weekly options expiry, which has been such an area of focus for all market participants, has undergone a bit of a change. Or not. Basically, what we reported is this, and this is all source-based information, that changes to weekly options expiry will only be looked at if data that is specifically data from July to September, which SEBI will study, shows significant, heightened, unusual retail participation. SEBI will look at many other measures, things like deepening cash markets, taking away disincentives of longer tenure derivatives, or rather incentivizing longer tenure some of the derivatives contracts, etc., etc. And then basically the bar to act on weekly options is going to be not low, it's going to be high in that sense. The BSE stock, of course, reacted. It's up it was up to 3% this morning. It's come off a little bit from the highs now. We have K. Suresh, National President of the Association of National Exchanges Members of India, Rajesh Baheti, Managing Director, Cross Seas Capital Services as well. Gentlemen, good morning. Great to have both of you here. Mr. Suresh, I'm assuming you've also, and your members, everybody's written to SEBI with your sort of feedback on this, like so many others we understand have. Rajesh, I don't know if you have as well. Thanks for joining us. Your thoughts, Rajesh, to begin this with you.
It's interesting that we're discussing whether we should be having weekly option contracts here or not, while at the same time the GIFT Nifty NSE IFSC has launched daily expiry contracts, and while they've done that, they've extolled the virtues of having a short-term risk management product. So that product can be participated by every retail investor in the world, barring resident Indians. And so I think the debate on whether the product itself has merit or not should be put to rest. Now the question is, how much freedom does the Indian investor get to do with his money versus, the kind of moral arguments that you put forth that overtrading is not good. So the merit question should be put to rest now.
It's interesting the way you put it. Every retail investor in the world except resident Indians, or the product in GIFT Nifty daily expiries. So, what we reported, Rajesh, does it look like the thinking is evolving, and in a way they can sort of are coming around to the industry's point of view, that maybe we need to do other things before we take a hammer to this product?
Absolutely, because when you allow zero DTE options on the international market on the same index, you're telling the world that it's okay to have such short-term trading products. So per se, I think that there is a thinking or rethinking within SEBI that we can't pull the strings too hard on the domestic market. You can't really suffocate the market here beyond a point. And liquidity is one of the main virtues of the capital market versus every other asset class. And you take that away. You take away the one good thing the capital market offers you over and above every other asset class. So I think that thinking is gone now. A realization has dawned upon SEBI and the powers that be. And I think they will find it very hard now to justify that while you have the zero DT products available on the Nifty for every other retail investor in the world, that the Indian investor should not even trade the weeklies.
Mr. Suresh, just wanted to get your thoughts in. So SEBI has indicated that there will be no change unless they see unusual retail activity. Now, what defines an unusual retail activity going forward? What could be the potential metrics? What could be the potential triggers?
Actually, SEBI is not also clear on that point. It is going on shifting its goal. Sometimes it says that fortnight expiry, sometimes weekly expiry per exchange, sometimes only one expiry. Like that, a lot of rumors, being floated. It has affected the stability of the market. As Mr. Bharati said, we are very particular about the stability of the market, and there must be an in-depth study or going down to the root of the cause and fix the issue instead of going on, scouting this may be the reason, that may be the reason, So all are subjective only, or not, there's no objectivity in our studies also. So with a short-term data, how can we fix for the entire thing, this is the best thing what we can do. So in our opinion, going on shifting the goals, or giving rumors to market that this is what going to happen or this is what going to happen may affect the sentiment of the market, may affect the liquidity of the market, may affect the brokers' business model also. That's what we have to understand. Already, brokers' business affected to a great extent.
Mr. Suresh, you and your members have written to SEBI with feedback?
Yes, we have given our feedback to a great extent about what should be done at
And what have you said?
No, actually, finally, the tagline of SEBI is what? Protecting the investors. That is the tagline. So instead of compressing the products, instead of compressing the other aspects, they have to focus on how to bridge the gap. So that gap is there always between informed investors and the uninformed investors in the market. I think already SEBI chairman himself said that 36% of the investors are well aware of the market, etc. That means the balance is left out without any knowledge. So here that very important role is nothing but educating the investors is very important. That is the only best solution as far as the market is concerned. Otherwise, we are going on disturbing the what's called the rhythm of the market by bringing in new, fresh ideas, etc., shifting the goalpost, which is not correct. So we have to think aloud on the part of plugging the educational gap, which is very, very important in our view.
Rajesh,
you can bring even entry barriers, you can bring in all those things. I mean, that will help us to have an informed investor as far as the F&O is concerned.
Yeah. Rajesh, we've discussed this earlier as well, and Yash put out in his story, all source pays that they will look at other things to do if they find, at the end of the day, idea is to protect retail, but they will do it through other measures. And what could those be, Rajesh? What would you suggest?
I mean, if the government really wants to do that, then, the STT on delivery is a very small component of the overall STT collection. Maybe the government should do away with the STT on delivery trading and to encourage more and more trading activity in the cash market. So encouraging another segment is perfectly okay. But you don't encourage another segment by shutting down one segment. I have very strong opinion on that. I've always had. And so we welcome any step. If you want to incentivize the longer duration contracts, if you want to incentivize cash market trading, we're all for it. But not by really putting brakes on another segment of it.
Longer tenure contracts, are there any disincentives right now compared to shorter?
No, so there are no disincentives. SEBI wants to incentivize it. I think one of the things that they put forward is that we don't have correlation margin set-offs yet. We have that extreme loss margin, which is applicable to all positions. So when you do trade options or trade futures, which have a very strong established negative correlation and you're long one and you have a very strong positive correlation, and you're long one and you're short the other, there should be correlation set-off, which is not available. So these are longer duration positions that can be incentivized by having lower margins based on the correlation and the net delta of your position.
This thing about what you mentioned, right? GIFT Nifty and the one-day option expiries, Rajesh. It's set up as a completely separate market, different regulator, right? Everything is different.
Yeah,
so it's not
theoretical merit and demerit. The theory of finance applies to both, right? So you can't say it's a great product for that segment, but as a product, it's not good for here. So you can argue that we don't want to encourage excessive trading and we want to educate our investors, but you can't per se say that this product is not needed in the country.
Okay, Rajesh, we leave it there. Suresh, thank you very much, both of you, for joining us here with that discussion pointed on, of course, focused on what the market perception now is with regards to these derivatives, weekly options contracts. You heard that loud and clear from Rajesh specifically. LG Electronics listing on your screen, 50% bump up, 1,700. If you can flip that around and look at the market capitalization as well, I think that should be LG now in the 1 lakh crore market cap club. along with a bunch of other companies as well. So that is the NSE CEO and MD, Ashish Kumar Chauhan. There's the Chief Operating Officer, and of course there's the LG team, for sort of ringing the bell along with the NSE officials there as well. So one more global company, global MNC, and of course close on the heels of the other South Korean giant, Hyundai, which listed late last year. LG Electronics is now part of the markets here, secondary markets here. Of course, big volumes as you'd expect. And what we'll do is in a bit from now, look at now this. What does 1710 mean in terms of valuations relative to some of the other players with this 50% bump? So we'll do that in just a bit from now.
There is 1.5 crore pending buy orders on LG, and the sellers are at around 13 lakh shares approximately. So the number of buyers outweighing the sellers by a large margin. And those that got in the IPO, I think 13 shares is what they got. They'll be very, very happy.
Of course, 50% up. What a bumper listing on day one, largely on expected lines. And LG Electronics is a play on India's consumer appliance market, which analysts point out is underpenetrated. But not just that, it's a play on premiumization. If you want to play the consumer discretionary space and you want a premium offering in terms of, the TVs, the inverters, the washing machines that LG Electronics sells, it's on the premium side. So it's a play on premiumization, and analysts also point out because of the localization efforts of the company, margins are also likely to improve. So that's the big one. LG Electronics opens with a gain of 50%, 1,700 on LG Electronics versus the issue price of 1140. Get back to the markets, and by the way, markets have come off. The Nifty is now below 25,200. It slipped about 100 points from the day's high, and the problem is the banking stocks. The Nifty banking index has slipped, and in individual names, it's Axis Bank with a cut of more than 1%. IndusInd Bank is weak in trade. SBI has a red tick. HDFC Bank is flat now, but come off from the highs. So banks are struggling a bit. Chandan Taparia, Head of Derivatives and Technicals Wealth Management, Motilal Oswal Financial Services, is now joining in. Chandan, are you disappointed to see that markets have come off in the first 1 hour, and what would the trade be?
Yeah, good morning. Thanks for having me. So I believe market is rewarding selective stock-specific theme rather than the broader indices. In fact, the Nifty got stuck in a range of 1,000 points from almost last 4 months in between 24,400 to 25,500. And the good part is that we witnessed some recovery in last 2 weeks by more than 700 points, and the base of the market is clearly shifting higher. However, momentum is missing, but I think at lower weeks, this kind of scenario could continue. As of now, we believe that 25,000 to 25,450 is going to be the broader trading range. We have seen some put writing at 25,000, but at the same time, the call writing is also visible. So that is not going to allow the market to move at much higher side. So we have to play the trading band between 25,000 to 25,450. So in that, one can go with buy on decline stance. Now talking about Bank Nifty index, I believe BFSI segment can do better, and Bank Nifty has really outperformed in last couple of weeks. Here the supports are intact, and now till it holds above 56,000, buy on decline could continue for the next leg of rally towards 57,000 marks. So yes, both the indices are likely to be positive to range bound, or buy on decline could be seen after the recent small profit booking from current zone.
Okay, all right, Chandan, what about individual stocks?
Yeah, so I believe selective themes and stocks are doing well. As mentioned that we have positive view on the BFSI segment, and selective financial stocks are doing well. So here I want to mention the name like Chola Finance or Shriram Finance. So Chola Finance is likely to be our first preferred pick, which has given a consolidation breakout of last almost 15-20 days. Major trend of the counter is positive, and stock is heading towards its new lifetime high territory after a long consolidation of last couple of months. In fact, we have seen built up of long position, and the stock has given a decisive hold above 1650 zone. So fresh leg of rally cannot be ruled out here. One can buy with support of 1625, and this time this counter can head to us 1730, 1750 kind of level. Apart from that, positive on the selective IT name, and I believe Nifty IT has bottomed out, and LTI Mindtree is one of the strongest counter, which has given a consolidation breakout of last almost 8 months. We have seen higher tops, higher bottom on the daily chart. In fact, the put writing is also visible in the counter, so one can buy with support of 5,500 for an upside target towards 5,800. And last trading idea, that is from your metal counters, golds and Gold and silver both are roaring high. Gold is glittering, silver is shining, and I believe that we'll continue to see the positive momentum as per the trend. And I believe Hindustan Zinc, Hindustan Copper, and Selective Metal Counter could see such kind of positive attraction. So Hindustan Zinc would be our preferred pick. The stock has recently given a rounding formation on the weekly chart, making higher tops, higher bottom on the daily scale. In fact, consolidation breakout of last 3 days is adding momentum, so one can buy with support of 510 and expecting 540 in the counter, apart from momentum in gold and silver as well.
Chandan, thanks so much for joining in. But let's put the spotlight on the stock of the day, LG Electronics. How do the valuations stack up versus peers after a 50% opening? Upasana now joins in with the numbers.
Well, it's certainly a blockbuster listing, as we all were expecting. Now, the company has listed at premium of 50% at a price of 1,710 versus the issue price of 1,140 per share. Now, mind you, this is entirely an OFS, and the promoter has sold nearly about 15% of the stake. Now, if we look at the valuations, the company's valuation stack at 53 times the FY25 EPS as compared to the peers. If we look at the one-year forward PE, which Havells is trading at around 46 times, Voltas at around 41 times, and Blue Star around 46 times. Now, Motilal Oswal expects the stock to trade at a higher multiple given the strong fundamentals and the return ratios of the company. It has initiated a buy with a target price of 1,800 per share, and we believe that this target price is certainly going to be outpaced today itself. Let's see, looking at the momentum. Now, Ambit is also given a buy rating with a target price of 1,820. It says that in terms of preference of the large appliances, it prefers LG, then followed by Blue Star, followed by Whirlpool, and lastly, Voltas in the large appliances category. Nomura has also given a target price of 1,800 per share, and Antique has given a target price of nearly 1,725 per share. So overall, certainly a bumper listing for LG Electronics.
All right, thanks very much for that. It's a strong one, 1,700 plus, holding on, by the way, and of course 30 million from 3 crore shares have been traded at this point in time. We'll take a quick commercial break here. We're going to come back in just a bit from now. On the other side, we'll have Manisha with the commodities picture. Silver, I suspect, perhaps will be part of what she wants to talk about. We'll look at other things as well. Stay tuned.